Today's lesson will be Chapter 20, Problem 4B. You should be able to see Cengage now, and what we're going to be looking at is Chapter 20, Problem 4B, and we're going to be doing a cost of production report for the month of October and also for the month of September. We're going to start, of course, with the month of September. In this problem, we're going to be doing two cost of production reports, one for the month of September and one for the month of October. And we're going to be the Pittsburgh Aluminum Company, and we're using a process cost system to record the cost of manufacturing of rolled aluminum, which consists of the smelting and the rolling processes. Materials are entered from the smelting at the beginning of the rolling process. The inventory of work process for rolling on September the 1st and debits to the account during September were as follows. So this is the information that we have for September for preparing the cost of production report. We're also going to have some information that's given to us for October, and this is the information right here for October. And so again, we're going to be preparing two cost of production reports, one for the month of September and one for the month of October. In the requirements, they want us to enter the balance as of September the 1st and the 4-column work in process ledger account for rolling. So evidently we're going to be the rolling department. And you'll remember that in a process cost accounting system, each department will have its own work in process account. So each department's responsible for preparing its own cost of production report. The cost of production report really is a breakdown of what's going on in the work in process ledger account. So in this problem, they're actually starting with the work in process ledger account, and we have to enter some information in there that was given information to help us to get started. So they want us to enter the balances as of September the 1st. And so we're going to look for the balance at September the 1st in the work in process account. And what they've told us here is that the work in process on September the 1st has a balance of $45,825 as the total cost. There were 2,600 units that were started last month, but were not finished last month. So we're going to finish them this month, in the month of September. And the ledger, they want us to record the beginning balance. And that beginning balance is $45,825. So here's our ledger account. These are the number of units. This is telling you how much was completed last period, and we're just bringing this forward. Because work in process is an asset account, it will have a debit balance. So we just want to go to the balance column, the debit column, and we're going to enter in $45,825. And then on the second part of this, from September 30th, the smelting department sent us 28,900 units at $16 a piece, and those units are going to have a cost associated with them. So remember that we are the rolling department, and we have received some materials from the smelting department. Right here is the number of units that we've received from the smelting department, and they just want you to put in the amount of the debit, because these are materials. They are considered to be direct materials, and direct materials will be debited to the work in process account. So 462,400 will be debited to the work in process account. Notice I put it in the first debit column because these columns here are for the balance columns. And technically you won't have anything in the credit balance because this is an asset account. It should only have a debit balance. So if we've received some materials in, we're going to add that to our beginning inventory balance, and that'll give us a new running balance after the materials have been added. So I'm going to pull out my calculator here, and I'm going to start by entering in 45,825. That was the beginning balance. That came from right here. We're going to add to it our debit of 462,400. And that'll bring us to a debit balance now of 508,225. It may be a while since you balance ledger accounts. So remember, because this is an asset account, when we debit it, we're adding to it. And this is what we call a running balance of the work in process account. After the materials have been added to the beginning inventory, this is the balance so far. The next thing we're going to write in is our direct labor. And the direct labor for this month, make sure you pick up for September, is 158,920. And direct labor adds to your work in process account. So that's why we're debiting it for 158,920. And again, I got that from here. We're going to find a new running balance now. So we're just going to add to this balance here 158,920. And that'll give us a new balance of 667,145. And then we're going to pick up our factory overhead. Make sure you're on September now. Factory overhead was 101,402. And this is going to be added to the work in process account. We will debit the work in process account for the applied factory overhead. So they have determined how much was applied, and they have put it into the work in process account here. So we're going to continue by adding the 101,402 to the previous balance, and that's going to bring us to a new balance of 768,547. All right, and so that was your factory overhead. Now, they've also told us that during September, 2,600 units that are in process on September the 1st were completed. And of the 28,900 units entering the department, all were completed except for 2,900 units that were 4/5 completed. So what they're telling us here really is what our ending inventory is. And they're also describing to you what has happened during this department. They finished the 2,600 beginning inventory units and they completed them. And then out of all of these that entered the department, all of them were completed with the exception of 2,900 units. So we really can't go any further with our work in process account. We need to go ahead and start the cost of production report. But before we do that, it's probably a good idea to check, make sure my math was correct here in the ledger account. So let's just check it at this point to make sure that everything is okay for math-wise. And we're okay now. I'm going to skip down here and I'm going to start the cost of production report. The reason being is I don't know what this amount is until I filled out the cost of production report. And so you need to figure out how much you've transferred to your finished goods. So in the cost of production report, we're going to start with our unit portion first of the cost of production report. And because we're using units, we only want to put the unit information down in this first part of the cost of the production report. The beginning inventory units at September 1st was given to you. You can get this two places. You can get it right here where they had it in the work in process account. So we know that there's 2,600 total units in beginning inventory. Or you could also have gotten it from the information that they gave us right here. So 2,600 is your beginning inventory units. So start with that first. Then they want you to determine what was received from the smelting department. So you had some materials that were brought into the rolling department from smelting, and you can see here that they gave you that information at 28,900. So 28,900 units are what we have received from the smelting department. You can also see that amount right here. It was given in two different places. So what you have to do now is you have to determine the total units that were going to be accounted for by the rolling department. And that would be your beginning inventory units plus those materials that you received from the smelting department. So we're going to combine both of these together to get the total units that we have to account for during this period of time. And that's 31,500. And it's always a good idea to check your work once you get to some double rules here. So we will make sure that our math is correct so far so we can move on. And so far, so good. All right, in the next part of the unit information on the cost of production report, we're reconciling these units. So we're just simply taking the information that we've gotten here and we're breaking it down a little bit further in a little bit different steps. And what I would suggest you do is just read your cost of production report, what they've given you. That'll give you some hint as to what to put in here. And always I would go ahead and complete my whole units first before I work on my equivalent units column, which will be this column for materials, and the equivalent unit column for conversion will go over here. So we're going to start with our whole units first, and let's finish this column first, and then we'll move over here and work on these. That's just a suggestion. So your beginning inventory at September 1st, again, we know that that was 2,600. It was given to us in our information, and we also have it written here. What we don't know is what we started and completed. So I'm going to leave that blank for just a minute. And we don't know what we transferred to finished goods. I'm going to leave that blank for just a minute. But what they did tell us in this problem was that the inventory in process at the end of the period on September the 30th, you need to know how many units that was. So right here, where it says during September, all were completed except 2,900 units. That's your ending inventory units. So I know that I have 2,900 ending inventory units for the month of September. So I can fill in that 2,900 units. All right, and another thing that we know right now, that total units to be assigned cost has to reconcile with the total units accounted for by the rolling department. Since we know the total units accounted for is 31,500, we know that 31,500 is our total units that we have to assign cost to. Does this make sense to you so far? All I did is I plugged in the information that they've given me. Now I can work backwards to find out how many units that I transferred to finished goods. What I will do is I'll take the units that are to be assigned cost, that's 31,500, and subtract out the ending inventory, and that will tell me what the units transferred was. So 31,500 minus 2,900 will give you 28,600. And that's what you have transferred. Once you know what you have transferred, if you know what the beginning inventory units are, you can find what you started and finished during this period of time. So 28,600 minus 2,600 equals 26,000. And so it's always a good idea to check your work at this point. Make sure all your whole units are correct, because if they're not correct, the rest of this is not going to be correct. So you can see that all I did is I put in the given information and I worked backwards to find these other items. Your beginning inventory plus what you started and completed will give you what you transfer. Plus your ending inventory tells you how many total units that you have to assign cost to. So in the next section, we're working with equivalent units. We're working with equivalent units first for direct materials. So in this column, it's going to represent direct materials, and this column is going to represent conversion cost. We're going to start with our beginning inventory. And what we know about beginning inventory is that we had 2,600 units. We also know from the given information that those 2,600 units were 1/4 complete with respect to conversion cost last month. So this month, we have to figure out how much it's going to take to finish those beginning inventory units. And so you would have to take the complement of this 1/4, which would be 3/4 of 2,600, to tell you how many units that you have to finish for conversion. But remember, we're starting with materials. And so what you have to know is that your materials are added at the beginning of the process, which means all the materials cost went into last month's ending inventory that was brought forward into this month as beginning inventory. So we have 100% of our materials that was added last period. What we want to do is calculate the cost for this period, which is September 30th. So we're doing this for the month of September. So because everything was added last month in August, we don't need to add any more materials to our beginning inventory. Our materials were already there. So then probably what I would do is finish up talking about beginning inventory. We need to finish our beginning inventory with respect to conversion. So I'm going to start by taking my total beginning inventory units, and then I have to multiply this by the complement of the conversion that we completed last month. What we completed last month, because this is beginning inventory, was 1/4 of these 2,600 units. That went in last month's cost. This month, we're going to have to pick up 3/4 2,600. So you're going to multiply this by 3 and divide it by 4 to get the total units that we've converted, which was 1,950. Then we're going to move to started and completed units. Our started and completed units we determined was 26,000. 26,000 units. What this started and completed means is that we started them with materials in this period, and we also finished them with materials in this period. So if we started them with all of the materials, 100% of the 26,000 is going to be the equivalent materials that we need to complete the started and completed units. Since these units were started, they had all the materials in them, and they were also completed. They've got all of the conversion cost in there too. So all 100% of the 26,000 units that were started and completed have all of their conversion in there. And then what we will do is we will combine our beginning inventory with our started and completed. And then we're going to work on our ending inventory. Now be careful with ending inventory. We know that we have 2,900 units in ending inventory. Well, if we have some ending inventory, that means they've been started with respect to materials. So we have 100% of our ending inventory in our materials. But we're going to have to calculate our conversion based on what we finished this period. Remember, we're talking about ending inventory now. And the ending inventory, this period, the number of units was 2,000, and they were 2/5 completed with respect to conversion. So I'm going to take 2,000 units and I'm going to multiply that by 2 and divide it by 5, 2/5. And let me check that again. Okay, it was 2,000 times 2 divided by 5. Yep, 800 units. So 800 units we have completed, I'm sorry, with respect to conversion this month. Notice for the ending inventory, I didn't take the complement. I only do that with my beginning inventory units. My ending inventory is what it says it is. If it tells you that they've completed 2/5, then you've completed 2/5 this month. To find the total units to be assigned cost for our direct materials, I'm going to combine both of these together. So 28,900 units would go here. And then I'm going to add that 800 units to the 27,950. And that's going to give me 28,750. And always check your work, because if this is wrong, the rest of your cost of production report will be wrong. And obviously, I did something wrong there. Okay, let's try this one more time. 2,900 units were in ending inventory. And I'm going to multiply that by 2/5. So I'm going to multiply it by 2, and I'm going to divide it by 5. And that's going to give me, wow, 1160 here. So my math was wrong. And if this is wrong, this is going to be wrong too. So I'm going to add to that 27,950. And that's going to give you 29,110. Let's try to check the work again. Got to have that right before you go on further. Well, let me check and see what I've done wrong. I said it was 2/5, didn't I? Oh, I see what I did wrong. Do you see what I did wrong? I picked up for October, and we're in September. So I got to go back up here. Here's where it is. It's 4/5. So I'm sorry, I apologize. It was 4/5 that were completed in September. Not 2/5, but 4/5 that were completed in September. So one more time, this is the charm here. There were 2,900 units times 4, and we're going to divide it by 5. And that equals 2,900 units times 4 divided by 5. Times 4 divided by 5 equals 2320. So let me check my work. So now we need to combine 27,950 with the 2320, and that will give you the total equivalent units. So 2320 plus 27,950 that will give you 30,270 units. And I'm going to check my work. And finally, we got the right amount there. So be careful, class, because this is 2 months of information here. Make sure you get on the right month. That's what I did wrong. It's really easy to do. All right. So now that my unit section is correct, I can move on to my cost section. We're going to start by calculating the cost per equivalent unit. And to do that, I need to know what my direct materials cost me. So I'm going to go back to my information, and the direct materials was what we received from smelting. And you can get that right here, or you can get it in your information from above. But the amount of direct materials, the cost was $462,400. This was given to you. So it's 462,400. Then you want to find your total conversion cost. Your conversion costs are your direct labor plus your factory overhead. Your direct labor was given at $158,920. We're going to add to that the factory overhead amount that was also given at $101,402. And that's going to give you a total amount for your conversion cost at $260,322. You might want to check your work. And then we're going to bring down our total equivalent units that we found in the unit section. For materials, it was 28,900. And for conversion, the total units, the total equivalent units for conversion was 30,270. you're going to divide your units into your cost to get a cost per equivalent unit. So we'll start with our materials first. So it's 462,400. We're going to divide that by 28,900 units. And that's going to give you $16 as the cost per equivalent unit. It's a good idea to check that cost per equivalent unit. So we check our math, and our math is correct. So we're going to move on. We're going to find the cost per equivalent unit for our conversion. So we're going to take the 260,322. We're going to divide that by 30,270 units. And that's going to give you $8.60. As the equivalent unit for conversion. Check your work. You have to have this correct before you can move on. Now, the second part of this cost is, first of all, determining what your total costs are that you need to account for by the rolling department. We're going to start with our beginning inventory cost that was brought forward, and that was given, and the amount of the beginning inventory was $45,825. $45,825 is your beginning inventory cost. To that, I'm going to add all of the costs that I incurred in September. And the costs that I incurred in September are going to be your materials cost, your labor, and your factory overhead. All three of these combined are the total costs that you added to this $45,825. So 462,400 plus, that's our materials, 158,920 plus your factory overhead, 101,402. All of that combined is going to equal $722,722. Let's check our work just to make sure that we've added correctly. So far, so good. Now we got to find the total costs that are accounted for this month. It would be your beginning inventory cost plus the materials, labor, and overhead. All of this combined here will give you the total cost. So I'm going to add to these costs the beginning inventory cost of $45,825. And that's going to give me 768,547. You can check this figure with your work in process balance. Do you see it's the same? And you can also check your work. All right, so these are the costs that I've incurred during this month. I want to break those down further. So what we're going to do is we're going to reconcile this cost with what we get at the very end. So we're breaking down these costs further so that management can analyze them to help them to see what they need to do for their operations. It'll help them make decisions about how to run the company in the future. Read carefully. What does it ask you for? Inventory in process at September 1st is your beginning inventory. Since we're in the cost section, they want to know what our beginning inventory costs are. Our beginning inventory costs can be found right here or in your ledger or in the information that was given in this problem. It's 45,825. Now, what we want to do is we want to complete the beginning inventory. And so we need to know how much materials we need to add to our beginning inventory. And in this case, it's 0 because all the materials were added last period. We don't have any new materials cost in this period to complete the beginning inventory. But we do have conversion costs that need to be finished. You will remember that they told us that our beginning inventory units were 1/4 completed last period. So what we have to do is we have to find out how much we have to complete this period, which would be the complement of this. Remember when we multiplied 3/4 times 2,600, it gave us the equivalent units here at 1950. So we're going to take our equivalent units of 1950 and we're going to multiply those equivalent units, their conversion that we're talking about here, by the conversion cost per equivalent unit, which was $8.60. So I'm going to multiply this by $8.60, and that's going to give me my beginning inventory conversion cost that I needed to finish. My beginning inventory units. It's probably a good idea to check your work. Just we'll make sure our math is right so far. And we're okay. So the next thing would be to find the total of the materials and the conversion that would be added to our beginning inventory cost. What we finished this month was $16,770 with respect to our conversion. So all of our beginning inventory units are finished. So we want to find the total cost of those beginning inventory units. So we're going to take that 16,770 and we're going to add to it the 45,825. And that's going to give us 62,595. Check your work to make sure your math is right. And we're okay to move forward. And the next part, they want to know what it costs you to start and complete units in the month of September. So we need to know what our started and completed units are first. So I'm going to go back to the top part of our cost of production report. Here's where we've got started and completed units. Start with your materials first. There were 26,000 units that would have to be multiplied by the cost per equivalent unit for your materials. So 26,000 units times $16 is 416,000. So 416,000 is the cost of our materials for our started and completed units. Then we're going to find the cost of our conversion for our started and completed units. So going back to started and completed, moving all the way across to the conversion, you can see that there are 26,000 units that I'm going to have to multiply by the conversion equivalent unit cost, which was cost per equivalent unit was $8.60. So I'm going to multiply $8.60 times 26,000 started and completed units for conversion. And that will give you 223,600. And it's a good idea to check your math because these two have to be right before you can get this correct. The combination of materials plus conversion is the total cost of our started and completed units. Again, I would check my work to make sure my math was right. And then you're going to add the cost of your beginning inventory units plus the cost of your started and completed units to get what you're transferring to the next department. So 702,195. If I've added that right, we're getting ready to find out, is the cost of my transferred units. Now this is an important cost here. This is what you're going to take out of your work in process account and send to the next department. So the amount was 702,195. This is our finished goods. Our next department is sending it to our finished units. Got to put it in the right column. We're going to credit our work in process. Why? Because we're reducing the asset, work in process, when we transfer these units and costs to finished goods. So 702,195 is the dollar amount that we sent to finished goods. And then what we could do is we could determine what our ending balance is in the work in process account. You can do that by taking the previous balance in work in process and subtracting your finished goods inventory. So if we took 768,547 and we subtracted 702,000 from that, minus 702,195 that we transferred out, what we have left over in ending inventory is 66,352. And we can check our work just to make sure that we're right. So this is the ending balance in your work in process inventory. Now, we want a breakdown of what it cost us in that ending inventory. And so we're going to start by determining the materials for our ending inventory. And so because we're looking at materials, we want to look at the units of materials in ending inventory that were equivalent units. So my ending inventory whole units were 2,900, and all 2,900 units had materials cost in them this month. So we got to find the cost of the ending inventory materials by taking 2,900 units and multiplying it by the materials cost per equivalent unit, which was $16. So 2,900 times $16 will give you 46,400 as your ending inventory materials cost. Check your work. And since that's correct, we'll move on to our conversion cost for our ending inventory. So we're at ending inventory. There were 2,900 whole units, but we converted only 2,320 of those units. So 2,320 are the number of units that we have completed with respect to conversion. This 2,320 units has to be multiplied by $8.60 to get the cost. And it don't give you that. So let's try that again. It's 2,320. And again, I got that right there. I'm going to multiply it by $8.60. 8.6 equals 19,952. Now we're going to combine the two of these together to get our ending inventory. Our ending inventory for this month is 66,352. Notice this amount is equal to this amount up here. This was your ending inventory for the work in process. So to complete the cost of production report, we will add our ending inventory cost to the transferred cost and that will give you 768,547. Notice this has to balance with this because we reconcile this cost by splitting them up, and it has to be the same amount here. So that's your cost of production report for this month. Now, something that I didn't really agree with and didn't like in the way they handled this was this last part of the ledger account. This technically is your ending balance and would be in the ledger account. But what they ask you to do here is to simply repeat this ending balance again. And I think they wanted to try to emphasize to you that the ending balance here is going to go forward into the new accounting period. And that ending balance will be 66,352. So I wasn't real happy with the way they presented that because I think it's a little bit confusing, but and it's not necessary really to have this in here again twice. You should know that this is the ending balance. I think they just wanted to reiterate though that this is going forward into the new accounting period. So in the new accounting period, this 2,900 ending inventory will become the beginning inventory next month. And that beginning inventory will have to be finished in the next month. Does that make sense to you? So it's 2,900 units in ending inventory that were 4/5 complete. That's where they're getting this. And this was the cost that was assigned to those. And it technically is this cost here. So I didn't like the fact they put this in here. It really shouldn't be here. Maybe you should put finished goods and then ending inventory balance here at 2,900 units that were 4/5 complete. But you wouldn't put it in the ledger again separately. That didn't make much sense to me. But anyway, to make Cengage give you the 100% that you want, you got to stick that in there. Now, the second part of this problem is going to be doing basically the same thing. We're just starting with the next month. We're the same department, but we're starting in the month of October because this was prepared for September and we have the ledger account for September. Now we're starting over again in October. So our beginning balance is going to be the same as our ending balance in the ending inventory. We're going to start with $66,352. And technically, I think they should have written here what that balance stood for. And maybe that's why they put it up here in that additional information here. There are 2,900 units that were 4/5 completed last month. We're going to bring forward that into this month. And then in this month, we've received some new materials from smelting. And this month, the number of materials that we received are 31,000 units at a cost of $511,500. So we received 3,100 units in at $16.50. You could multiply that too, and it would have given you the same thing that was given here. Then we're going to rebalance the ledger account just like we did before. So our beginning inventory, 66,352 plus 511,500 is 577,852. Then we're going to add our direct labor to this. Our direct labor, make sure you're on October, is 162,850. And we're going to take that 577,852 and we're going to add to it $162,850. And I'm going to check my work just to make sure my math is correct so far. And then we're going to add in our factory overhead that was given. The factory overhead, make sure you're in October, is 104,494. All right, we need to find the new balance by adding 104,494 to this. Which is 845,196. And then our finished goods, we don't know what that amount is. And so we have to complete our cost of production report to find the amount that we're going to transfer to finished goods for this month. Our beginning inventory for this month came from last month's ending balance. We had 2,900 units that were 4/5 complete. But there are 2,900 whole units that we're going to start with. Then we received 31,000 in from smelting. Then the total units accounted for by the rolling department are 33,900. And then we're going to finish up our whole units and we're going to reconcile it with this amount. We're going to start with our beginning inventory and we're going to fill in what we do know. We know that we've got to reconcile it with the amount of 33,900. And in our given information at the top for the month of October, it says that the units in process at the beginning of the month were completed and that 31,000 units entered the department. All were completed except 2,000 units that were 2/5 completed. So my ending inventory is 2,000 units. So subtract 2,000 from 33,900. And then you're going to be able to find your started and completed units by subtracting 31,900, or excuse me, subtracting 2,900 from 31,900. So 31,900 minus 2,900. Will tell you what you started and completed. And then you can move on and start with your beginning inventory units and determine how many direct materials units you need to add to your beginning inventory. And that in this chapter is always going to be 0 because all of the materials were added during the last process. For my conversion cost, I have to take that 2,900 units and I'm going to need to multiply it by the complement of what we had left in ending inventory. There's a couple places you can get that. The complement of this would be 1/5 of 2,900. So 2,900 units times 1/5 is 580 units. And I would check my work. Remember, your started and completed units have been started and finished with respect to materials and conversion. You may be seeing a pattern now, I hope so. The started and completed units are always the same all the way across. Then you add down. And then you're going to look at your ending inventory. What you have to remember about ending inventory is all the materials are 100% in there this period. So all materials are in there. It's the conversion that you haven't finished for your ending inventory. So you're going to have to find the conversion units by taking 2,000 units and multiplying it by what they told us they finished in the ending inventory. They were 2/5 complete. So 2,000 times 2/5. Is 800 units. And it's a good idea to check your work here. And then you're going to combine these two to tell you the total units to be assigned cost. And once you have all your units accounted for, you're going to assign cost to those units. Starting with calculating the cost per equivalent unit, we need to know the direct materials cost. And that you can find in a couple of different places, but right here in this ledger, it's 511,500. And then we're going to put in our equivalent units for our materials. That was 31,000. And then we're going to divide 511,500 by 31,000 units. And that'll give you $16.50. And it's a good idea to check your work because your cost per equivalent unit has to be correct before you move on. Your conversion cost or your direct labor cost, which was 162,850, plus your factory overhead of 104,495. 494, excuse me. The total conversion cost are 267,344. I'm going to put in my equivalent units for conversion, which was 30,380. And I'm going to divide my cost, my conversion cost by my cost per equivalent unit. And then make sure you check your work so you can move forward. Then I'm going to take my cost of my beginning inventory, which were $66,352. I'm going to add to it my cost incurred for the month, which is the total of your materials, labor, and your overhead combined together. We'll combine both of these together. And I'm going to check my work. And then we're going to break these costs down further, starting with your beginning inventory cost. We would have had no materials that were added. We have to find what it took to convert our beginning inventory. Our beginning inventory conversion units was 580 units. 580 times my conversion cost per unit of $8.80 will give you 5,104. And then you're going to add that to your beginning inventory cost. And the total cost of your beginning inventory was $71,456. It's probably a good idea to check your work and make sure your math is right. And then we're going to do the cost of our started and completed units. What we started and completed was 29,000. 29,000 units times my cost per equivalent unit for materials of $16.50 gives you 478,500 as your materials cost. And we're going to take our started and completed units for conversion, which was 29,000. And I'm going to multiply it by my conversion cost per unit, which was $8.80. Then I'm going to combine both my materials and conversion together. Okay, I added wrong, looks like. So let me try that again. 478,500 plus 255,200 equals 733. 700. All right. And then you add your started and completed units to the cost of your beginning inventory. And I would check my work here. And this amount is what you need to plug in here as a credit because you're transferring out 805,156 units here. And now you can find the ending inventory by subtracting this 805,156 from the 845,000. 845,196 minus 805,156 leaves you with the ending inventory of 40,040. And to finish off this work in process, they just wanted you, like you did before, to bring this down again as the ending inventory balance. So you're done with your work in process ledger account. And getting back here, we need to calculate the cost of our ending inventory. We're going to do this by taking the ending inventory units for materials, which was 2,000, and we're going to multiply that 2,000 by the materials cost. Sorry, your materials cost is $1,650. And that'll give you 33,000 for ending inventory materials. And then you've got to take the 800 units for conversion for ending inventory, and you multiply that 800. I didn't go there, I'm sorry. You multiply 800 units times $8.80. Check your work. Yeah, I was afraid of that. All right, let's try this one more time. It was 800 units times $8.80. Now, check your work. And then we're going to combine the two of these together. And this 40,040 is going to match up to this. And then when you combine both of these together, it should give you 845, 196. And you're through with your second cost of production report. And then in part 3, it says the cost per equivalent unit for direct materials, did it decrease or increase from August to October? So let's look at our materials. All right, we need to start with the one in September. Okay, now what did the question ask us again? It says cost per equivalent units for direct materials from August to October. All right. Well, at September, it was $16. And in October, it was $16.50. So our materials increased. And the cost per equivalent unit for conversion for the month of September was $8.60. And then it went up to $8.80, so it increased. These changes should be investigated for their underlying causes. That's why we do a cost of production report. And so that's all of this problem. I know it was very lengthy and it takes a while to do it, but really this last problem, I think, demonstrates everything you need to know about how to prepare a cost of production report for this period of time. And what it is just a restatement of your work in process accounts. And management uses this to help them to direct and control cost. So I'm going to stop here and we'll see you next time. Bye-bye.